You have probably heard people talk about making money from the stock market or from stock investing, and you don't even know where to start, or you're confused, or you probably just feel, oh, this is for those that have plenty of money. But that's not true, because people, ordinary individuals, are investing in the stock market every day. So in today's video, I'm going to be showing how stock investing work, how to start step-by-step process without you feeling confused or overwhelmed. So the first step is understanding what stocks mean and what stock investing means here. So I can be using stocks or shares. They both mean the same thing here. So investing in the stock market is like, for example, you are buying into a particular company. Example, if I invest in MTN, it means I'm part of the owners of MTN. I've bought a part or a piece of MTN and I'm now a shareholder. So when you invest in a company, it's like you are buying a part of the company here. So now you're a shareholder and you are entitled to also bear in the profit and loss of that company. So not only the profits, both profit and loss, you're entitled to bear it. So there are two major ways you can earn in the stock market. It's either through dividend or through capital appreciation. Like now, let's say you bought MTN when it was 100 naira, and now, for example, it's over 200 naira. That means you've gained over 100 naira per unit share. That is capital appreciation. Another way you can also gain in the stock market is through dividend. Let's say now you bought Zenith Bank and they are declaring, let's say, 3 naira per unit share. So that way you are calculating how many units of Zenith you own and how much have they declared to know how much dividend you are entitled to. So any of these ways, you can earn both ways or one of these ways in the stock market. And why should you even invest in stocks? You should, because it is a very great way to hedge against inflation. Unlike just doing low risk investment like treasury bonds, like treasury bills, government bonds, money market mutual funds. If you are doing stocks investing, you are sure to hedge against inflation, because most low risk investments will only preserve your capital. And that is why, yes, we would advise start with low risk, but do medium risk. Example is stocks investing. It is volatile and it is definitely not risk-free. But at the same time, if you do it with guidance and with understanding and the knowledge you need, you can sure make a whole lot of money from the stock market. So the next step would be that you should get the basics right. Yes, I literally will tell people when they tell me they want to invest in the stock market, I ask them like 2 to 3 first major questions. Number 1, do you have an emergency fund? Number 2, do you know your risk appetite? Number 3, do you have an investment goal? And number 4, do you have a low risk investment? These 4 questions is very important because it's the foundation before you even think of stock investing. Have an emergency fund. An emergency fund is very important. Have a low risk investment, be it in money market mutual funds, treasury bills, government bonds. Make sure you have one low risk investment. Also, know your investment goal. Why do you want to invest in the stock market? What is your aim? How long are you going to keep the money in the market? Also, know your risk appetite. Are you somebody that once you see red, you are panicking to sell, or you can understand what the market means and even buy more when you are seeing red because you know what it means and the stock has potential? So you want to get all of this right before you start investing in stock. Okay, another thing you need to do is to choose a stockbroker. Before you can invest in the stock market, you need a licensed stockbroker, or you need to go through a licensed stockbroker. And it is now very easy. We have contacts. You can do it online. We have apps like Afrivest, Bamboo, Optimus. We have Trove, Chaka, Meristem. We have a whole lot of apps that you can actually consult a broker through, open it and get your CSCS number and start trading your stocks. So the CSCS number means a Central Security Clearing System. And what it simply means is, just think of it like your normal bank account. That is where they keep your stocks for you. So it is only for you, that number. And you actually need it before you can trade any stock. So your stockbroker is also going to help you with this CSCS and your CHN number. Another thing is, you want to start small because you are just starting. Start small, test the market. You can start with as low as 10,000 naira. I can remember when I started investing in the stock market, I started with 100,000 naira and I bought 10 different stocks. So that's like 10,000 naira per stock, per share I wanted to buy a year. So you can start with as low as 10,000 naira and keep increasing. Just have a plan on how you are going to increase your stake in these markets and also your units in each of these stock at the end of the day. So starting small is not wrong, but you don't want to remain small. Because when you start small, it's the number of units you have that will determine how much you can make from the stock market. So you want to make sure you're increasing your units and your bid always in the stock market. Also, you don't just want to invest in the stock market. You want to pick the right stock, choose the right stock, stocks with solid fundamentals and potentials. And this is not just something you just want to say, oh, somebody is doing this, I want to do it. You want to make your research. There are platforms you can use to make research like investing.com, Yahoo Finance, to determine which stock you want to buy. So there are also things you have to look out for when buying your stock. So you have to look for solid stock to buy with having a long-term potential in mind, in the sense that you don't just want to think that, oh, I have 10,000 naira, I want to invest it in the stock market today and I'm going to remove it by next week. No, that's not stocks investing. You're trying to trade, and majorly investing is what you should think of doing. So minimum time I tell people to hold the stock for is usually 12 months, because you want to think long term. You can see people holding stocks for 5 to 10 years and they are still getting capital appreciation from it. So you want to really know the kind of money you are putting into the stock market. You can't put money for your school fees in the stock market because anything can happen. So you are putting money that you can let go of for at least 12 months into the market. Another thing is you can never know everything about the stock market. Economy is changing, finances, you need to keep learning about money, keep learning about the market for you to stay updated, know how well you can buy more stocks. If you need to sell, if you need to hold on to it, you need to stay updated. And I'll mention also some mistakes you don't want to make. Because you are seeing red in your portfolio does not mean you should panic sell. Anytime you see a bearish moment, it doesn't mean you should sell. There are sometimes you see red and you want to take advantage and buy. Because the market is bearish does not mean next month is not going to be bullish. So you want to know what you want to do that moment. Don't panic, sell. Sell when you actually know you've made your profit. And I tell people, you really don't lose in the stock market except you sell below your cost price. Like now, let's say I'm buying 100 naira per unit for a particular share. If I don't sell at 90 naira, I've not actually lost. It's when I sell below that I've lost. But if I'm selling at 150, I've made a gain, So that is the only time you literally lose from the stock market, when you are selling below your cost price. And why? Most times people do it out of panic, out of fear. Another mistake is investing money that you need in few months in the stock market. That is very risky. Invest money that you can hold on to, that you really don't need for few months. That is what you should actually do. Also, don't just invest in a particular stock because you read it in the news or you saw it on Twitter or Instagram that this person is buying that stock. No. Yes, they can give you advices, but also do your own due diligence, do your own research before you buy that stock. So the truth is, stock investing is a very good way to build your wealth quickly. Because yes, it's a medium risk investment. The higher the risk, the higher the returns at the end of the day. But you don't just want to hold on to only low risk investment. It helps you hedge against inflation faster. See you in my next video.